So I think we're going to see another good report, 200,000 in line with the year-to-date trend. All of the labor market indicators that we've seen over the course of the month of August suggest that this economy and this labor market remains white hot.
ADP was a little light yesterday, and some people say that's just what happens in August. You're going to get lighter readings that then get revised higher later. Could we see that? That
is the trend. Over the last 10 years, 8 out of 10 times, the initial print for August has been weaker on average by about 40,000, and then you get revised up by around 50,000. So we won't discount that. You always have to sort of take all these numbers month to month with a grain of salt. We had in July a disappointing report, although that was due to the one-off factor, I think, with the Toys R Us closures. So there's always noise in these numbers. That's why we sort of look at the 3-month trends. And as I said, our number would keep the 3-month trend around just over 200,000. Incredibly impressive at this point in the cycle.
We have LaSalle coming on in a little while. You should hang out to watch it. I was reading the note. I couldn't believe it. He goes, it sounded bad that there's no employee loyalty anymore, but the reason there's no employee loyalty is because there's so many good opportunities elsewhere.
Take this job and shove it. It's finally it's a workers' market again.
And you need to supposedly do more and more to retain employees by giving them the type of corporate culture. And then he says, and he doesn't mean ping pong tables and kegs, which I think is great. But that's there's nothing wrong with that.
You like pot too.
Yeah, well, it's so strong though. Andrew, am I right? I mean, it's like
you're looking at the wrong person.
Okay.
But you had mentioned in the lead-up the shortage of workers and the difficulty that firms are having to find workers. So they do need to try to keep the workers that they have because it is so very difficult to be able to replace them if they leave.
Jim, how about you? What are you looking for?
Well, morning, Becky. I agree the trend is still very strong, 200,000 or better per month, but I think the August numbers do tend to be weak. So I'm going for the lower number today. I've got 165.
But you think that is a lower number because of the August one-off, or you think?
Yeah, no, this is just the ups and downs from month to month. It's the technicalities. I mean, obviously, yesterday you saw another new post-1969 low for jobless claims, and the ISM employment numbers that came out this week were booming. So I think it's pretty clear the trend is very strong, and the trend's been 200,000 or better. So I don't see any slowing whatsoever in the trend, but I just think the August number will probably print on the lower side nonetheless.
Well, you just really lowered expectations now. I mean, I don't know, how do you have a bad, it have to be 120 for people to say this is bad, I guess.
And again, against the backdrop of all of the numbers that Jim talked about, everybody is going to be, I think, very tolerant of an initial print that looks a little bit disappointing.
Well, if it's 200, then it's going to be holy.
Again, we've just continued to see ongoing strength in the U.S. economy, which is the August numbers, whether we're talking about the ISMs, consumer confidence. I mean, there's a resilience there, even in the face of increased uncertainty, concerns about tariffs.
Well, this is all happening before the New York Times op-ed. So we'll see how that affects a lot of the policies in the economy and stuff, because that's not in these numbers yet.